tried every indicator and you're still getting trapped by liquidity. The key is seeing market structure instantly using the only true fix. Let me prove it now. Quick note before we start, this video is built on a complete 90-day system. You need to understand the logic behind it, and that's what we're going through now. Mastery only works because it perfectly maps market structure logic. We're breaking down that exact logic now. I'm going to show you the difference between a breaker structure and liquidity sweep. First thing you need to understand is when we're looking at a breaker structure in the market, let's just mark this off, this high. This is when we're looking at a breaker structure, when you see the body candle close. Now, where many people are getting wrong is when they're looking at a potential wick through. So let's say we use this high to this high, you see a wick through. That is not a breaker structure. That's a potential liquidity sweep. And you can see after we sweep this high, the market does run to downside. And then we eventually have a true breaker structure as we push through. Now it's really the liquidity sweep or liquidity grab at the ideal location on the chart. Now we understand the true breaker structure, and we'll walk through that in more detail in a moment. What I'm going to do is mark up this chart in front of you. We're going to mark out the previous breaks of structures, and I will show you how we're going to use these levels to find your true breaker structure and where we're going to look for that liquidity sweep. So let me just add some levels onto this chart. So we've got our breaker structure on the chart on this daily time frame here, the US dollar CAD. These previous levels here you can see are old previous levels that you can see here. Now they're marked off for you for the current day as a SL. That stands for a strong low in the market, and a WH, which is a weak high. And this is the same concept logic that goes through inside that 90-day program. What you need to understand is when we're looking at a breaker structure to liquidity sweep, the difference we're looking for. Let's just look at current price here in the market. We're going nice and close to these candles. When we identify this candle being pushed through this previous high, head to the left, and we get a body candle close, that is your valid break of structure. We want to see that body candle close, not just a wick. We need to see a body candle close. If we had a wick through to start with, that is a potential liquidity sweep or liquidity grab in the market. But straight afterwards, we see a follow through with a closed candle that then gives you a valid breaker structure. So where are we actually looking for these valid sweeps? So that is the key point. If you're not applying this in the right location in the market, then you're going to get stopped out time and time again when it comes to liquidity. There's two ways liquidity is going to form on your charts. It's going to form as an area for a sweep in the market to take orders to continue in the opposite direction. And the other way we can see it is obviously a liquidity run, which means a run on a previous high of liquidity, which is in fact where we see the breaker structure forming in the market. So when we see this previous high here, let me mark this off, this previous high right here in the market, that's not a great S, is it? So let me just mark that again. When we see this previous area here of liquidity above this high, that is where we're going to see that strong push to the upside, and we see the valid breaker structure because we're running the liquidity above that high in the market. Now at that point in time, this previous high would have been a weak high in the market, and the weak high is where liquidity is going to sit above that high. Liquidity sits in two locations on your chart: above highs, below lows, and within areas of imbalance. Now, we're not talking about imbalances today. That is more inside the 90-day program, but imbalances will hold a liquidity gap in the market. Area you want to be looking and focusing on your sweeps in the market are really going to be either your weak high or your strong low. Let me go through why. We see this area as a strong low in the market, and this is our area of a weak high. There's two ways you'll look at this. One, you can look for price to come back towards your strong low, sweep through the low, taking liquidity, closing back up with just a wick through. That shows your sweep and is taking liquidity. And normally we're going to see an area below that, like this area of leftover imbalance. Price will push through your strong low into that imbalance, and then you see a run back for the liquidity at the opposite end of your range, which is then that weak high. That is one way we can look for liquidity. The other way we can look for liquidity is when we start to see a potential pullback in the market and we create our current weak high. Price can sometimes push back up, wick through that weak high to then close back down and continue back down to shift structure. So there's two ways we look at liquidity here. One, we can see a weak high being swept to reverse structure. And the other way is we're looking for the strong low to be swept for the continuation of that trend. This is the entire system. Now, if you're thinking, how can I master all this market structure markup every day, especially the only true fix? You're exactly right. It takes dedicated effort. That's why I want to show you the 90-day profit trading system, the complete roadmap to master this logic and achieve consistency. And very often that gives you a very good trade if you're going with the trend. And I do suggest many of you do not kind of trend the sweep, but you actually trade the pro trend. This will keep you on the right side of the market. So for an example we're going to use is this previous low head to left. When we saw price breaking this structure, this became our strong low in the market. And then we continue to break up. And as you can see, there's no previous high marked here. And the reason for this is a valid reason. We don't mark this as a valid high based on the structure that I teach in this channel. The reason is we don't see a valid close down. Like we see a candle closing down on this candle here below the previous candle's low. Or like we see this candle closing down below this candle's low, that forms that high. And the same as we see this candle closing down, that forms this high here. Because we don't get this on these few candles, then there's no level marked here at all. And that's the key difference here when you're looking at these marked areas. When we mark this level, I'm going to just mark on my magnet tool, mark this across. Do you notice something? This is our previous strong low in the market. This is our current weak high at that point. Now, let me go through by replay mode to make this even easier for you to see. So let me remove this previous level. This is our current strong low in the market. This is our 50% area of the current range. Now we go forward one candle, we should see eventually a close down. So this one is closed down. The next candle open will create a solid area. So now we have our current trading range in the market. Where is our strong low for liquidity? Down here. Now for me, if we run through this level right here, and this is what I was talking earlier about, was an area of imbalance that acts an area of liquidity. If we have a run on this area of liquidity, being this imbalance, that means we're going to run for this low here. We mark it out for you. This low will get run after closing through this area. Now, if we close through this level as well, we don't just wick through. As we have nothing else here, we're going to run for the strong low for external liquidity. So basically, this imbalance and this level is classed as internal liquidity. Let me go through this now candle by candle. So as we start to move sideways, we push back and look at where the market pushes straight into. It goes into this area of imbalance. So we look for price to hold here and not close through. So you make an inside candle. We're currently holding. The next candle goes slightly deeper into the area and we have a push to the upside and we close back down. Still holding. And again, we now fully fill this imbalance. You see how the market slowly continues to push lower into filling this area of liquidity. Now, if we do close through, we will run for this low. And we do. We close through and remove this area. That means we will now take this low of liquidity. And look where price just stops above that low. And this is the problem many face in the markets. You see this run and we just make a slightly higher low. And many are seeing this now as an area of price was holding. And now you can look for continuation to run to the high. Now, if the next candle closes as a bullish candle, this is when many are going to jump in for a buy. And again, it's the wrong process. You want to wait for this low to be swept to take any liquidity below this current internal low. Let's go forward one more candle. And now we get a nice push down through this level. And we close back above it. That means we held at the internal liquidity of this low. But we swept the strong low for liquidity. Taking out this low as well as this internal low is even a stronger bias to the upside. And from here is where you can expect price to continue up to run for the week high. Price has done its job here. It's come down. It's took all liquidity in this move at this area of imbalance, this internal liquidity low as well. And now we've taken external liquidity. We expect price to want to run now towards that week high. So we just play this forward Instantly, you can see the market runs for that high and takes the high. That is the type of liquidity that you want to be looking for. You're looking for your internal areas to be swept. You're looking for your external areas to be swept. That is with a pro trend move. That's giving the idea of understanding how you read price with the trend. So what about if you're looking for an area to be swept when we see that full reversal? So let's now go over to another section of price and I'll show you how this can look. Now we're on the 4-hour time frame. I found an ideal location to show you how it's going to look when we're going against that trend and where price eventually will reverse the trend. So you can identify that we've been bullish. The market has shifted bearish with this here. We've broken to downside. And the next candle, once we close on this candle, is going to create a valid weak low. So we go forward one candle here. So now we've created that valid weak low. What we're looking for at this stage normally is your pullback against this current area to go above the 50% in areas of imbalance, areas of supply here. And even we could look for a sweep of this internal high, even a sweep of the actual strong high before we then see a run back for this week low. That is when we're looking for a pro trend. Now, sometimes price won't always do this. And we're sometimes going to see the week low getting run before we see the pullback phase, which can often lead to a counter trend trade in the opposite direction. And you can hold it often to reverse structure. So let me go through this step by step so you can see exactly how this type of liquidity will work when it's a counter trend type of trade. So we just go forward on through candles. See the market is moving sideways. At the moment, we look like we're hitting higher. And then all of a sudden, we see a big wick to downside, taking our external liquidity before we've even made our pullback above this 50% area. This is now telling me that from here, we can look for price to run for the actual strong high. Now, I'm not saying we're taking a trade here at all, because we look at lower time frames and look for a better trade. But the idea is that we can expect a slight pullback potentially on this candle and then a run towards the strong high. Now, we do have areas on the way up here that would actually be of concern to me, understanding the area of imbalance. So let me just mark those out quickly so you can see these. So this would be an area I'd be watching where price has just reacted off. Another one just above, right here. Another area just above. And eventually my internal high of liquidity here. So that means to take a buy when you're counter trend trading. Yes, it's a good valid area to take a buy if we see an external liquidity of a weak low being run. Remember, external liquidity is more powerful than internal liquidity. So from this point, I expect to see price eventually bouncing from this area of imbalance to run through it. To the next one, a pullback, a run through, to then run for the internal high, to then see a pullback and eventually run the strong high. That is the way you want to read structure when it comes to liquidity. Let's go forward, we'll see how price actually moves. So we had a small pullback and potentially we'll see a continuation. Now we're pushing back into the area of imbalance. Now we fully fill that imbalance. We haven't closed it yet, but we fully filled that imbalance and we hit into the 50% of the 4 hour. Often that's why we see this reaction and this rejection. So potentially a pullback, we get a pullback. Now we're looking for that continuation. And we pushed through this area. So that's been removed. That internal liquidity of that imbalance has been removed. Where do we push up to next? The next internal area of liquidity being that imbalance. 50% fill. This could create a pullback again. Let's see what happens on the next candle. We get a pullback to fill this current move to the upside. Now we want to see the next push through. Let's see if we can get that push through. So an inside candle. We're creating inside candles. We're looking for that continuation. Now we get a full fill. We push through with a wick. Again, this shows me the continuation of this move. All starts from where? It all starts taking out this weak low, which is our external liquidity at that point in the market. So all we need to see now is a close through this area of liquidity being that imbalance, that internal. Again, we get a close through. That now tells me we're going to go for our next liquidity. Remember, liquidity is where price will gravitate to for taking the next area out. So from this point, I'd expect to see it gravitate towards this level of internal liquidity being a swing high. Let's continue and see if price does. Now we have a big drop to downside, and this is when many people are going to jump in, believing we're going to sell now at this point to run for this low, because we made that pullback. But what happened is we closed through this last area of imbalance. That means we have to go for this high to find liquidity. Let's continue forward. And we'll go through candles at a time. Okay, look how the market's recovering slightly. And now you're starting to see the market continue to push and break the previous high. So now we're running towards this high. But if you were to send this big drop, and potentially most people do, they believe we're going to continue to run for this low. But we already now understand that the external liquidity is swept, okay, which is that weak low. That's our external liquidity. We then took out two areas of internal liquidity, and we start to run, or we need to run, should I say, for our next level of liquidity internally. This is just a pullback taking profits off. And it's also going to bring in sellers in the market when they shouldn't be selling. So please do not get it stuck into these types of traps. Let's continue with the price. We want to see a continuation to run for that liquidity. So sideways, slowly pushing higher, and there you go. We've just taken that internal liquidity. That is what we're looking for. Don't get into the trap of thinking these big moves are going to continue down for these areas. Well, they're not going to do this. When you see a sweep like this at an external low before you see the pullback, often you're going to see price want to reverse structure. The last part of this sequence is if we can close through that internal, where do you expect us to go? If you know where price is going to go, if we do close through that dash level, put it down below in the comments and tell me where price is going to go after that level gets closed through. And see if we can push through that area. Okay, so price starts to push higher. We continue to push higher with that wick, and we now closed through. So we now closed through and removed that high as well. So the market has gone from a external liquidity sweep, running internal liquidity, leaving now nothing but our external liquidity being our strong high. Now we could just see a run of our strong high and a reversal back for the weak low. But very often when we see this type of liquidity sweep at a weak low, it signals a full reversal. Let's just speed this up now. And straight away we see a strong break of that level and reverses structure. So this small sweep down here was key to understanding the start of a potential shift in the trend. And that's how you can read liquidity in the markets and start potentially finding these types of trades, whether they are counter trend trades or pro-trend trades. So that's the 90-day profit trading system, your complete roadmap to consistent profits validated across all time frames. Don't waste another day trading without a proven system. Now is the time to master your edge. The link to enroll is right below this video. If you want to see the companion tool that automates this entire system in seconds, watch this next video on market structure that shows the process inside the tool.